Hello, hi, good evening, everyone. Right, so welcome to our live sessions for today. So I'm Sean here, senior analyst with Ultima Markers. Okay, all right. So anyway, welcome again today. So basically, what we're having for today is we're gonna talk about how to build your own strategies, okay, or own trading strategies on today. Okay, so basically, today what we're going to cover is we're going to guide you step by step on how to start to build a trading plans or a trading strategies. Okay, so how many of you here? Just questions. Okay, how many of you here have your own trading plans that is written clearly on the papers or some things? Anyone have it? Like you have a very clear strategies or you have a very clear trading plans. You have like when you want to enter the markets or some things. So anyone have this, which is clearly written? Yeah, yes or no? Okay, okay. Yes, there's one say yes, right? Yes, there's a hands up. Okay, all right. So basically, if you know, okay, every successful traders that I know, okay, or maybe you can know it from your friends, okay. So many of those that success in trading, they don't rely on luck, okay. They don't actually rely on the lucks to wins or make profits or something, okay. Yeah, okay, still fine tuned. That's great. Right, maybe today's it will help you how to make it better. All right. So basically, for almost every successful traders, include those that I know, okay, or okay, maybe include myself. Okay, I actually have a trading plans. Okay, we have a trading plans that works for our own. Okay, so same as it is. So basically, the plan is the strategies. Okay, so basically, when you have a plans, it will be easier for you to make trades to trades on the markets. Okay, of course, if you still don't have it, it's okay. All right, it's still not too late. So on today, we're gonna guide you on how you're gonna make your own trading plans that works for you. Okay, all right. So for today webinar, today live sessions, we're gonna cover on. Okay, all right. This is the okay. This is a this is some ads over here, right? So I guess you guys are on the trading competitions, right? Right. So if I think it's the last day for today, or I think next week will be the last one. Okay. And so anyway, if you guys are on the competitions, good luck. So if you're not making any ranking yet, don't worry. Maybe we'll have a new seasons coming soon. Okay. Right. So basically, what we have for today is we're gonna cover on. Okay. Okay. We're gonna guide you on how to build your own trading plans. Okay. So before that, we're gonna explain about that. What is trading strategies? Okay. What is the trading plans? Okay, and why they are important? Okay. And of course, we're gonna give you a trading strategy frameworks that help you to build your own trading plans. So basically, everyone's they have their own trading plans. Okay, it means that you can have your plan A, you can have this plan B, and then the other ones they can have is plan C or something. So, okay, it's up to you. But basically, all the trading plans or the strategies they are relying on one frameworks. Means that once you got the frameworks, you can create different trading plans cater to different markets. Okay, so and of course after that we're gonna give you maybe like an example. Okay, how to build your own strategy. So this is what we're gonna cover on today. All right, let me put up my ball pens or something. Okay, so basically this is all the four things that we're gonna cover okay, for today's. Okay, and step by step guide you guys how to build a trading plans. All right. Okay, let's see. So basically, what is trading plans? Okay, so again, let me ask. I see just now there's one say he has a trading plan that's still fine tuned. Okay, so who else has trading plans? Who else? Anyone? Or still trades on feeling, based on feeling? Okay, I see David has a trading plan, but still fine tuned, fine tuning. What about the others? Yes or no? Both. Oh, got it. Okay, Jasmine. Okay, I remember Jasmine. Okay, both. Who else? Who else? Come on, give me some response so that I knows that you guys are still with me. Because quite unfortunately, because there's some things with our link on today, so the participant here is quite less today, but it's okay. Okay, so at least we still have someone listening. All right. So I guess many of you already have a plans or something, but still fine tuning is okay. All right. So basically, let's cover a little bit on some training plans. Okay, some info on training plans. All right. Let me put on. All right. So, shit. So this is, oh, sorry. I think this is the wrong title. I've got to change it. All right, sorry. So basically, what is training plans? So basically, the training plans means that it's a structured plans that outlines, okay, when, why, and how you enter or exit the trades. So remember this, okay? There's two wife and one husband, okay? Two wife, one husband, which is when and why and how. Okay, so this is what we have in our training plans. We need to know, we need to have a written down plans, or even that the plans already in your mind, okay, to let you know that when you should enter the markets, or why you should enter the markets, and how you're going to enter the markets or exit the markets. So these are the plans that help us to trade better. Okay, so these are the trading plans that we need in when we come to trading the markets, right? So what are the key components that should have in the trading plans? Okay, the first thing, of course, is that it able to help you to identify the market's conditions. Okay, meaning this is like it should be able to tell you why and when you should enter the markets. Okay, this is why and when, the market conditions. Okay, this first over here. Okay, the market conditions is the things that you need to able to analyze on the markets. Okay, so this is the ones that tell you, okay, why you should enter the markets. Okay, and we got a entry rules and exit rules. Okay, so basically this is the reason why. This is for the timing of the entry and the exit. Okay, so why when should we enter the markets and when should we exit the markets? Okay, and then how are we going to react when the market doesn't go on our way, okay, on the right way that we want. Okay, so this is when we should have the risk management. Okay, so basically risk management doesn't mean that when to stop loss only, okay, but it also includes when to take profits. Okay, so this is the key component that we should have in our trading plans. So remember these four things we should have. Okay, so this is the key component. Okay, so for example, let's say we went through we look at the markets. Okay, so we're gonna say, oh, if the price break above this resistance, okay, break above the resistance with a strong volumes. But of course, in forex we don't have volumes. But yeah, it's not the accurate volumes. But if let's say you are trading on the stock markets or even on the cryptos or some things, okay, if let's say the price break above resistance with a strong volumes, okay, I will go long, okay, at a price, okay, maybe this price, maybe the breakout price, okay, and with a stop loss, the exit rules, okay, with a stop loss below the supports, okay. So this is the things that we should have in our plans, okay, the trading plans. So basically, this is how the trading plans works, okay. So trading strategy or even trading plans, okay, why they matters, okay. So basically, this is how most of the successful trader does, okay. What can I say is that almost every traders that I know, they're really success in tradings. Okay, they have their own plans. Okay, so plans over here means that it's something that you clearly know what you are doing. Okay, if let's say for today you're gonna trade on the full margins. Okay, they say people always say, right, if you trade on the full margins, and then it's a very wrong things. To be honest, it's not wrong things if you know what you are doing. Okay, for example, let's say there's one person he knows that, oh, okay, the markets fulfill all my things, fulfill all the criteria that I have. Okay, and then I want to use a small capitals with the leverage because for us we have one to 500 or some things. Okay, so these are you can go all the way full margins. Okay, so but it doesn't mean you are wrong when you go on full margins or some things. Okay, as long as you know what you are doing. But of course, over here, I'm not telling you that you need to go on full margins. Okay, this is just an example. Okay, it doesn't matter how you do it. Okay, as long as you know why you are entering the trades and why you why you want to enter the trades, okay, or what are the risks that you can afford as long as you know it. So this basically consider a good trading strategies or trading plans that you already have a plans. Okay, so this is what trading plans about. Okay, so how trading plans can help us. Okay, so the first thing, is provide us with consistency. Okay, so when we come to trades, we don't trade based on our feelings. Okay, we don't trade like, okay, oh, I think Euro USD is going to go up. I'm going to go do buy over here because I feel that the market is going to go up. No, it's because it's fulfill the criteria that allow you to enter the trades. So for the 10 times when you go into the trades, okay, you know that 10 out of 10, okay, this is the way that you want to trade. So when the market doesn't go your ways, you know that it's not your fault. Okay, it's just because the market don't always go where you want. Okay, so this is why when we trade with the plans, it helps us to prove to provide consistency. Okay, and of course it helps us remove emotions. Okay, so I believe over here many people like, I mean, include myself. Okay, to be honest. Okay, sometimes we trade with emotions. Okay, especially when we miss a trade. Okay, like for example, okay, I'm looking at it, I'm monitoring the markets. Like I'm looking at the goals. Okay, I say I'm gonna buy goals. Okay, but because of I didn't focus on the markets. Okay, then I miss out. Okay, I miss out the trades. Okay, so when the market is missing out, okay, when you're missing out the markets, okay, sometimes we tend to be FOMO. Okay, fear of missing out. Okay, FOMO. Okay, so if you don't have a plan, okay, you're gonna let your emotions control you. So you're gonna enter right away. But if you have a plan that how to say, control you, or maybe like or just control, okay, or just say control, okay. So if you have plans that help you to control your emotions, okay, so you're gonna tell yourself, it doesn't fulfill my criteria anymore. Okay, so I'm just gonna let it go. Okay, so I'm gonna wait for the next setups. Okay, so this is why the trading plans can help us to remove our emotions. Okay, so many traders, to be honest, they lose money is because of the emotions. Okay, and the next thing is, of course, the risk control. Okay, so basically when we have a plans, it helps us to lay out a risk management. Okay, so you know that, okay, the stop loss over is setting over here. Okay, I just set my stop loss over here, so I just gonna let it be. Okay, so once the price hit the stop loss, I know the market doesn't go my way. Okay, so this is how we do the risk control. Okay, and of course it allows us to track our performance. Okay, so this is like similar to the consistency. So basically we need to know uh, whether our plans works. Like just now I see David saying that he's still fine tuning, right? So when you have a plans, okay, you keep on doing with consistency, okay, and then it doesn't trade with emotions. Okay, you just let your plan works. Okay, so like for example, you out of 10 trades, maybe you got like 4 trades correct, and you got 6 trades wrong. Okay, so you know that your plans need to be fine tuned. Okay, so this is how you can track your performance. So try to write down a trading journal. Okay, trading journal, like why you enter, okay, and why you're losing trades. So try to write a trading journal as well. Okay, so this allows you to track your performance, and then you can fine tune your strategy. Okay, you can fine tune it. Okay, and of course, with peace of mind. Okay, so I'm not sure anyone here they have. I mean, anyone here's read one book before? It's called what was it called? Okay, Trading in the Zone. Anyone read this book before? Trading in the Zone. Anyone? Trading in the Zone. Okay, it's a very good book on trading psychology. Okay, it's a very important one. No, okay, all right. You guys can go and have a look if you guys want. I think you got the ebooks online, or you can go buy ones. Okay, so it's called Trading in the Zone. Okay, so basically, over the books in the books, okay, is covered on trading psychologies. Okay, so basically they also talk about trading plans. Okay, so one of the key point is, okay, it mentions every trade, okay, that we do, okay, should be my peace. Okay, means that your mind is peace. Okay, means that you don't have emotions. Okay, and then when you go into the trades, okay, you don't feel like very panicked. Like for example, some people's right, they go in, oh, are they gonna afraid? Like, they're gonna be very afraid. Like, oh shit, whether my trade is gonna be wrong or right. Oh no, the price is going up. Oh shit. Oh, should I take profits or something? Or then price is going down. Oh, should I cut loss right now? So it's very stressed. Okay. So basically, when you have a trading plan, it allows us to trade with a very peaceful mind. Means that once you go into the trades, okay, and then you don't feel like anything. You don't feel anything. So you don't feel like, oh, whether I'm gonna be wrong or something. Okay. If it's wrong, then it's not your fault. Okay, it's not. Well, of course, it's not market fault as well. It's just that market doesn't go our way. Okay, so it's the same things. Basically, if you know about trading, okay, if you know, if you can go have a look at the books, okay, it basically says that the trading is all about probabilities, okay, meaning that you can never be right all the time. Okay, you can never be right all the times. Okay, so I think we covered this before or on our previous webinars. Okay, trading is all about probabilities. Okay, you can never be right all the times. Okay, so what we can do is we increase the chances of being right. Okay, and then with the helps of a good trading plans or a good methods that help us to be right for most of the times. Okay, so when you have a trading plans that work very well, okay, so you know when once you go into the trades, you don't do anything else. You just let market works the way out. Okay, so this is when we able to really success in the market is that when you're able to trade with a peaceful mind. Okay, so this is a very good experience for me as well. Sometimes, to be honest, okay, I still trade with some stress. Okay, because sometimes when we lose like for a few times, okay, you start to feel like okay, very disappointing, and then you're very afraid to make the next trades. Okay, or even you really make the next trade, you are still very afraid of being lose. Okay, so if you have a very good training plans, okay, it will help us to do all these things, okay, which is include help us to remove the emotions and help us to track our performance, okay, and then help us to have a very good risk control. Okay, so these are the plans that are able to help us. Okay, so if you want to be successful in the markets, to be honest, okay, you really need to have a trading plans. Okay, whether it's a written plans or the plans that are really printed in your mind, it doesn't matter as long as you know that you have it and why you enter it and why you when you should enter it or some things. Okay, this is all we need to have. Okay, all right. So how trading plans can be helpful to us? So basically, it about allow us to have a clarities. Okay, means that trader knows exactly what to look for. Okay, means that today, if you're gonna trade some things, you don't just trade because you feel that the price is gonna go up. Okay, because you know that this setup tell me I'm gonna be right mostly. Okay, I'm gonna be right mostly. Okay, so this is what I want to look for. Okay, so and then the next thing is of course it provides you with confidence. Okay, like what we said just now. Okay, a proven strategy allows traders to trade with confidence. Means that you don't feel stressed and then you don't afraid of being stopped out or you don't afraid of being entered on the wrong trades. Okay, it doesn't matter because you know that uh, when times go by, okay, you are gonna win eventually, okay, because you can be wrong for one trade, but you can be right for 4 or 5 trades, okay, and then you're wrong again, and then you correct for next trade. So this is when we have the trading plans, you can be more confident in trading, okay, and of course adaptabilities, okay. So once you have these strategies, okay, because we know markets they never be the, I mean, they can never be the same for all the times, okay, they can be changing sometimes. Like for example, 4 or 5 months ago, okay, we are all talking about the tariff, okay, the tariff, okay, and then on these few months, we are seeing that okay, people are looking for Fed, whether they are going to cut rates or something, okay. So market can be keep on changing, okay. So when you know that things are slightly different, okay, so you can slightly adjust your strategies, okay. Remember, this is just adjust your strategy. It doesn't mean that you change your strategies. Okay, so this is why we need to have a very good framework to build a strategy, which we will cover later. Okay, so of course, it will provide you to have a long-term success. Okay, so basically, once you have a very good plans, okay, so like for if you're making 10 trades, okay, then you will have a profitable of 8 trades or 9 trades or something, even a high, very good ones, okay. So you're basically looking for a long-term success with trading plans, okay. So this is how we need. This is the reason why we need to have a trading plans, okay. Right. So after all the long talking, so now let's go to the real things, okay. So anyone here interested to learn? So just give me a yes or something so that I know you guys are listening. Yes, great. Okay, good. Okay, I think David and Jasmine is very active. Okay, Matt, thank you. Okay, thank you for the response. Okay, all right. So how to build your trading strategies? Okay, so like what I said just now, everyone's can have different plans, okay, or different strategies. Okay, even one person's, okay, can have multiple strategies. Okay, you can have everything. Okay, strategy A, B, C, D. Okay, or swing trading strategy, a scalping strategy, or something. Anything. Okay, you can have it. You can have even tens. Okay, but of course you don't need that much. Okay, if a strategy is good, you only need like basically one or two. Okay, so whether you're gonna build if you're gonna build a strategy today, okay, you're gonna build a strategy today. It doesn't matter how you're gonna build it. Okay, basically they are based on one frameworks that I would suggest you to try it out. Okay, I'm not saying that this is 100% right way, but this is based on my experience. Okay, and this is based on the survey or not survey like the research that I've done. Okay, because I've seen many bird trades before. Okay, especially those that success. Okay, so basically they have a training plans. Okay, so I'll I'll just summarize everything. Okay, so basically if you want to build a training plans, okay, you just need to have a framework. Okay, this is the framework that you need. Okay, so remember these words. Okay, cost. Okay, just thinking. Okay, just think that if you're running, I mean, like we are trading, right? Okay, we are doing trades. We want to make money. Okay, so like we are doing business. It's the same things. Okay, so everything start with a cost. Okay, remember this costing. Okay, this is the cost that you need. So if you're doing a business, you need to have a cost so that you know okay, eventually you can make profits. Okay, so same thing, if you're going to trade the markets, you need to have the cost. Okay, so this remember this cost, COSD. So what does it stand for? Okay, so this stand for conditions. Okay, so this is the first thing that you should have in your plans. Okay, this is the things that answer on why. Okay, so why you want to take the trades. Okay, this is the conditions that you decide to take the trades. So why you want to trade the trades, okay, or why you want to trade gold now, or why you want to trade Euro USD down, okay, why you want to do buy, why you want to do sell, okay. So these are the conditions that you should have. Okay, the first thing of course is the C, conditions. So you should have the conditions that allow you to identify the things that you want to trade or the directions that you want to trade. Okay, and you need to have a criteria for opening the trades. Okay, of course, this is what we call as uh, entry setup, entry signals. Okay, I just use O to make the COSD. Okay, opening of trades. So you need to know when you should enter the trades. Okay, to open the positions. Okay, so this is the O. Okay, and then the S is what if the price doesn't go your way? So how are you going to set the stop loss and how much you're going to risk on these trades? Okay, so this is S, stop loss. And target profits. Okay, so when you should take profit and how you should take profits. Okay, so this is the thing that you need to have. Okay, like for example, you're gonna take profit over here. So of course, what I'm saying target profit here doesn't mean that you're gonna stick. I mean, you're gonna stick to it all the way. Okay, it doesn't matter. But at least you need to have the ideas that when you're gonna take profit, okay, and then how much profit you're gonna make if you're right. Okay, so you can have a good risk and reward ratio. Okay, and then only you decide whether you want to enter the trades. Okay, like for example, now, okay, you say you're gonna buy Euro USD, okay, you're gonna buy Euro USD, and then my stop loss is like, for example, 50 pips, okay, 50 pips, okay, but then you see, oh, the next resistance is only 20 pips, Okay, so you know you're gonna lose 50 pips to make the 20 pips. Okay, so this may not be a good trade because the risk reward ratio just doesn't work very well. Okay, so this is why you need to have the target profit as well. Even though, okay, even though we always hear that the terms that let the profit runs, right? Okay, so it's the correct things, but at least you need to know what is the minimum target profit that you aim for, and then whether does it uh, make a good make a good risk reward ratio with your stop loss. Okay, so this is why we need to have the target profit as well. Okay, so remember this: all trading plans should have conditions. Okay, why you want to take the trades. Okay, and then when you're gonna open the trades. Okay, and then how you're gonna manage your risk if you're wrong, okay, or the market doesn't go your way, and how much you're gonna lose, and then what is the target profit when you're gonna take profits, okay, whether price it is the price level that you want to take, and then or how you want to take profits, okay, whether you want to go with a partial profits, okay, and then you want to go for a trading stops, some things, okay, so these are the things that you need to have in your mind, okay, so remember this CYSD, every trading plans should be worked on these frameworks, which is the CYSD, okay, so one of the most important parts over here, of course, I mean, of course, four of them are very important, okay, but one of the most important part is you need to understand your conditions, okay, so this is the first step, okay, this is the first step that you need to have, all right, okay, let me see. Okay, I see there's a Q&A. How many pips can we replace this SL from the market price on the implant? Oh, sorry, I don't really get the questions. How many pips we can replace the SL from the market's price? Oh, okay. Oh, okay. It means when the price moves, then what is the minimum stop loss that we should set, right? I mean, the price from the. I think if not wrong, is on. I think it's 3 pips or something. Better check with your account manager or something. Maybe yes, I didn't really notice that. Okay, Yasin, sorry, yeah. I think you can check with our customer support or you can check with your account managers. Yeah, I think it's 3 pips if I'm not wrong. Okay. All right. So next thing. So now we already know this is the framework that we should have. So what exactly they are? All right. Okay. Let's see. Okay. So how are you gonna build a strategy? Okay. How are you gonna build it? So this is the first part. Okay, which is the conditions. Okay, that you need to fulfill first. Okay. So this is a step by step that you can do. Okay. So first thing, if you're going to build a training plans, okay, like I said just now, you can have different kind of training plans. Okay. So first thing you need to know, define that what you want. Okay, what kind of training plans you want. Okay, first thing, are you setting up a training plans for a swing tradings or a day tradings or even scalping? Okay, so you need to know. Okay, like what I said just now, you can have different kind of plans. Okay, like for example, for me, okay, I just a sharing, okay, just sharing. I'm actually a swing trader. Okay, I trade based on day charts or forward charts for trends. I swing on trends. Okay, but I know that sometimes market they can go sideways. Okay, so they doesn't allow me to have any trading opportunities. So I will also have a trading plans just to trade on gold. This is for me, okay? This is just sharing, okay? I have a trading plans that work for gold only, which is trades on intradays, day tradings. And basically, this is my 2 plans that I have with me, okay? But of course, this is based on use, depends on how you want to have it. Okay, so I have 2 plans. Okay, so I know my plan A is for swing tradings, okay, and then my plan B is for day tradings, go trading on goals. Okay, so this is for me. Okay, so I know that okay, these are the 2 things that I want. Okay, so I want to have a plans for a day tradings and also a plan for swing tradings. Okay. Okay. So after that, you need to know okay whether you want to trade on. I mean, what are the style that you want to trade? Okay. So if let's say for example you are going for a day tradings. Okay. So basically, day trading, what you're gonna do, you're gonna trade on. You want to trade on a trend, intraday trends, or you want to trade for a intraday breakout. Okay, or whether you just your plan is just work for a swing or for a sideways markets. Okay, like there's some traders they trade on sideways, like when the price when they say okay, like for example recently goes okay, is on a sideways trends. Okay, so you can still swing on that. Okay, you can still swing on that. Okay, like you see that on the day trades. Okay, go for example we see gold. Let's see have a look at the gold. Okay, so recently I think we all know that right, gold is on a sideways trends. Okay, so previously, okay, we say 3004. Okay, this is a resistance over here. Okay, so basically for some traders, they trade on uh they trade on consolidates. Okay, they trade on sideways. Okay, so when the price come into the resistance, okay, they're gonna find opportunity to trade. Okay, so they just trade on the support buy resistance sell. Okay, so it's a very simple one. Okay, but sometimes it can be a very good strategy. Okay, it just depends. Okay, so what are your style? Okay, like so for me, for example, okay, my swing tradings I basically trade on two things. Okay, one is reversal and trends. Okay, so basically I would aim for a reversal trades because I love reversal. Okay, because they provide the most profits. Okay, the most profit and the minimum risk. But of course, they can be very tricky to catch sometimes. Okay, so this is how I do. Okay, so for day tradings, I basically trade on the trends on the intraday trends. Okay, sorry. Okay, so basically I trade on intraday trends. Okay, so for day trades. Okay, so this is my trading style. Here I have one for swing tradings on reversal and day tradings, which is trade on the intraday trends. Okay, so basically you need to know your style. Okay, so what do you want? Whether you want a swing trading methods or you want a day trades, and then after that you go to decide whether you want to trade on a reversal trend followings, or you're just trading on a breakout only, or you trade on counter trends. Yeah, there's one trader that I know. He basically trade on counter trends. Okay, so this is what they do. They wait for the price to go into, like for example, recently we see what was that called? Like for example, GBP AUD. Recently we see that, right? GBP AUD, Euro AUD, all those pair, they like going up for a very long time. Okay, all the way up. So what he do is he plots a very strong resistance. Okay, like maybe a few resistance. Okay, so he keep on doing shorts on the counter trends directions. Okay, but he's still able to make profits. Why? Because he have a very good plans. He knows that uh, when should he enter, okay, and when should he average up or average down. Okay, so sometimes we say once the price doesn't go away, you are like add on the positions, right? It's not actually wrong. Okay, you can do it actually. Okay, as long as you know what you are doing and what is your risk. Okay, so we see people like they call it as martingale, right? Okay, martingale, right? So I'm not really very like encourage you to do that. But if let's say you have really a very good risk control and know exactly what you are doing, it can be a very good strategy as well. Okay, but the first thing is you need to have a really good plans, or you know very well that your strategy can work and you have a very good risk control. Okay, so this is how you can do. Okay, so of course the next thing is you need to have a method that help you to analyze the markets. Okay, so for me, uh, my swing tradings, I rely on chart patterns. Okay, my swing tradings, I rely on chart patterns. I trade on reversal or a trends. Okay, so basically when I find any chart patterns that shows reversal, I will look for a setup. Okay, I'll look for an entry. Okay, and then for my day tradings, I trade on multi-time frame analysis. So we cover on last few weeks, right? Remember that MTF. Okay, so this is one of a very good thing as well. So if you are experienced enough, you can actually combine all those things. Okay, to work for you. Okay, or even some people they just trade purely on support system. Okay, so it actually works as well. Okay, so this is what we have. Okay, so for example, I'm a swing trader. Okay, so I know I'm a swing trader. I want to trade on a swing. I want to trade on the trends. Okay, so I'm looking to go for a reversal trading. So basically, my swing is only aim for a reversal. Okay, so maybe some people they also say that okay, I'm a swing trading. I would like to swing on an uptrend. Okay, when like for example, recently we see, I mean previously, the Euro USD, the GBP USD is very strong uptrends. Okay, so basically you can swing all the way up. Okay, so this is a trading style. And then of course, how you analyze the markets. So for example, like me, I'm very good with MTF, okay, and chart patterns. Okay, so apply that to my strategy. Okay, so this is what I do. Okay, so if let's say for you, you have a very good indicators, or you have a very good method, like for example, you just trade based on support resistance. Okay, even though some people they use what is it called, the pivots. Okay, pivots, like you got S1, S2, S3, okay, or the R1, R2, R3, or this thing. Okay, so basically this can be also a very good tools to help you to create the strategy. Okay, like the one friend of mine that I told you, he basically trade on the counter trends. Okay, so what he do is he apply the pivots on day charts or which weekly chart, I'm not really sure. Okay, so what he do is he wait until the for example, if let's say it's on a strong uptrend. Okay, he's just gonna wait for the S2 and S3, and then he will start to push in the counter trend entries. So this is what he do. Okay, so so as long as you have your own way, you know what you are doing, and then you have tools that work for you. Okay, and then you keep on fine tune it. So it's basically can be a training plans for you. Okay, all right. So far everyone still with me? All good? Okay, all good. Great. Okay, all right. So now let's make some example of my. Okay, this is just a sharing. Okay, on my method. This is my own method. One of my method that I use to trade a reversal swing, swing tradings, which is focused on a trend reversal. Okay, so this is what I usually do because I'm very I focus a lot on chart patterns actually. Okay, this is one of my favorite way to analyze the markets. Okay, so I focus a lot on chart patterns. Okay, so what I do is like for example, this is one of the trades I had done previously. Okay, I think it's at early this year. Okay, the dog when previously dollar start to reverse. Okay, because we see previously dollar is quite strong. I think last year quite strong. Okay, after that, the dollar doesn't break through. Let me see. What's the level again? Yeah, I think somewhere over here. It's actually a very strong reversal pattern over here. Okay, for dollar. Also, this is when we start. This is when the GBP USD start to form a setup. Okay, so the first thing for my plans, which is I have, is the market conditions. Okay, so what I do is I find a potential reversal patterns. Okay, so like for example, GBP USD over here. If you're able to look at it, you will find there is actually a inverted head and shoulder form. Okay, and at this point, okay, we see this thing come out. Okay, let's say over here. Okay, let's say over here before this happens. Okay, you will see there's potential reversal. Okay, when the price start to retest this level. When the price start to retest this level. Okay, and then the price pullback. Okay, supported again. So basically over here, you will see a potential. Okay, it's not a confirm. It's a potential head and shoulder pattern form. Okay, so at this point, I know that okay, GBP USD is the pair that I want to aim for a buy. Okay, so what I do is I would wait for a uh, reversal confirmations. Okay, so how do we identify a confirms formation of head and shoulders? Basically, is when the price breakout of the neckline. Okay, so this is the neckline. Correct. So I guess if you guys know about head and shoulder, you know that this would be the neckline for head and shoulder. So when the neckline is formed, okay, when the neckline is formed, sorry, when the neckline is breakout, basically this confirm that the pound, the inverted head and shoulder, okay, the pound dollar inverted head and shoulder is confirmed. Okay, the reversal is confirmed. So what I do is I'll go into my step 2, opening trades. Okay, like for example over here, you see head and shoulder. Okay, of course, if you are very brave, so you can just trade right away. Okay, but of course, but it's better you have a criteria. Okay, now you know that I want to look for a buy on GBP USD. Okay, but what can I do? Okay, so when the price break out, okay, I would have 2 entry. Okay, the first one, I would entry on the lower time frame breakout. It means that I would change into H1 or H2. Okay, so I see the price breakout, and then this is a small retest. So basically over here we can confirm the price may break out. Okay, and then confirm the head and shoulder patterns. Okay, so this is my first entry. Okay, of course you can divide different entry as well. Okay, so the second entry, of course, is when the price retest of neckline. So we see, okay, let's say, for example, you trade over here, okay, and the price go up, retest again, okay. So you can enter on the price retest. Okay, so this is enter, opening of trades, entry signal. This is your entry signal. When you're going to trade it, okay. So, of course, this is when the things already happens, of course. Okay, but at this point, okay, at this point, let's say over here, what you can do is you need to go through this. This is because after what already happens, right? But during this period of time, okay, we just ignore this first. Okay, during this period of time, what if you're gonna enter the trades, you need to make sure that you have a stop loss as well. Okay, so for example, at this point, if you are doing a first entry stop loss, okay, for example, first entry stop loss, okay, so you can you need to have a very good stop loss point. Okay, so for this case is because I'll set fear patterns. Okay, this is because when if I enter over here, okay, my exit plans, okay, my exit plans, which is the S, okay, the stop loss, okay, for this entry setup, okay, is when the price break below this again, this level, okay, then I would cut loss somewhere over here. Okay, so this is my entry plan. Okay, let me make it clear again. Okay, so remember, market conditions can be one. Okay, but the OST, okay, which is the OST, it can be different. Okay, means that you can have a different opening price. Okay, as long as the market condition allows you. Okay, so this is my first entry. Okay, okay. So let's say, for example, you enter on a second entry. Okay, which is you wait for the price to retest. Okay, on. But of course, this is because I am using a different time frames. Okay, let's say you are trading on H4, purely on H4, okay, purely on H4 forward. You wait for breakout and then you wait for retest. So this is where you would enter, okay, retest of neckline. Okay, so this is where you would enter. So what you can do over here is, like for example, my case, I would set a stop loss over, below this 200 EMA. Okay, this is my method. Okay, this is my own methods. If let's say the price breaks below, but of course I will buffer some space. Okay, you don't just set a stop loss over here. You're gonna get wiped out. If let's say the price retest to the 200 EMA. Okay, I will put somewhere below. Okay, so if you are able to tolerate even more risk, okay, you can even okay, you can set on the previous support. Okay, so but if let's say you're gonna set over here, you need to make sure your target profits can be a very good one. Okay, like for example over here, let's say if you enter over here, okay, you're gonna put your stop loss over here, quite far. Okay, so basically you need to make sure, okay, this is where I want to TP because this is the uh previous high. Okay, so this can be a very strong resistance. Okay, so I will need to make sure my stop loss is the risk reward is higher than the stop loss is lower than my target profits. Okay, so this is how I would do. Okay, so this one, can you guys clear? Is it clear or got confused? Okay, so this is how I do. This is my own swing. This is my strategy for a swing tradings on a reversal. Okay, So this is what we can do. Okay, of course, so if let's say you are, let's say you are doing a trade over here, and then of course, when the price comes to a target profits, so you can just take profit if you want. But of course, if let's say you see a very strong trend over here, what you can do is you can take partial profits, okay, and let it run, okay, and of course you can go for another trading plans that which is work on a trend following as well. Okay, so this is what you can do. Okay, so this is how we can build a trading strategy. Okay, so is this clear? Is this clear for you guys? Is this helpful? Okay, so basically this is how I do. Okay, so one of the very important part is market conditions. Okay, so like for example, the webinar that we covered on last few weeks, like for example, the multi-time frame, and then what else we are covering? The trend analysis. Okay, so these are all very helpful methods that help us to analyze the markets, which is help us to identify the market conditions to find a potential setup. Okay, so if you are still not having a trading plans yet, okay, try to go for a first step. Okay, the step one, try to find a good methods that help you to build the C, the market conditions, the conditions that you want to have. Okay, then you can fine tune on your entry. So basically, for the way that I entry, I would use the help on the multi-time frame. Okay, I use multi-time frame to help me find an entry with the moving average, and sometimes I will use MACD as a reference as well. Okay, so this is my plans. Okay, so remember this. Your plans need to have COST. Okay, market conditions, opening, stop loss, which is your risk management, and a target profit, which is a realistic one. Okay, so this is how we can have on a trading strategy. All right, so all clear. Any questions, guys, would like to ask? Just leave me a message in the chat. Okay, I will just answer you guys. All right, so the last part. Okay, we still have 10 minutes to go. Okay, last part. So trading strategy, all you need to know. So what you need to know is, okay, so the first thing, trading plan is just a start. Okay, so trading plans can be useless if you don't follow it. Okay, remember this. Okay, like you can have a very good strategy. You have a very good strategy, trading plans written out. Okay, is writing on papers and you put on a blackboard, you put on a boards or you put on the screens or something. Okay, but if you don't follow it, okay, you're still not able to success. Okay, sometimes, to be honest, because I'm a human as well, okay, sometimes I will out of plans. Okay, sometimes I will like go haywire. Okay, I'll just trade based on what I want. Okay, so this is the wrong thing. Okay, so sometimes we tend to be making some mistake. Okay, so make sure you don't keep on like it happens. Okay, so make sure if you have a plans, just stick to it. Okay, and like what we said just now, trading plans, the trading plans can be proven works only if you track it with consistency. It means that you maintain your plan for at the same times. Okay, you maintain your plans. Okay, for a couple of trades to prove that whether it works. Okay, if let's say your plans like you are wrong for like if you're making, let's say, 5 trades or 10 trades, okay, but your trades is wrong for like 80% of the time, or you're not making money for 80% of times, so you have to fine tune it, see whether it's because the methods, the conditions that you have is wrong, okay, or not good, or maybe because of your entry, they should fine tune your entry, okay, or is it because of the target profits and the stop loss that you have, the risk and reward ratio is not right for you. Okay, so this is what you need to have to understand about. Okay, so it's very important is that this is quick sharings. Okay, risk and reward ratio. Okay, R&R. Okay, we say R&R. We always heard, right? Okay, the risk have to be 1 and the reward has to be 2. to be profitable. Okay, so this is not. I'm not saying this is wrong. This is not. This is correct actually, but it's not entirely correct. Okay, you can have a very bad R&R. Okay, to be honest, you can have a very, for example, let's say you risk $1 to profit 0.5. You can do it. Actually, it doesn't make you wrong. Okay, if your winning rate is very high, okay, it means that it maybe like for example your strategy, okay, you just like maybe you put a stop loss of 10, let's say we say 10 pips, okay, for example, okay, but you take profit at 5 pips, okay, but out of 10 trades, maybe you be right for 8 trades, okay, or maybe we say longer, you out of 50 trades, okay, you're right for like maybe 40 plus trades, okay, so you can have a very low R&R. It doesn't matter, okay, as long as you know what you are doing. Okay, so sometimes they say, oh, you need to have a very good R&R to make a profits, make a good profits. It actually depends on your strategy. Okay, for scalper, like for example, like scalping, okay, the R&R sometimes can be very bad, but because they are scalping, they rely on the frequency and they rely on the winning rates. Okay, so this is how we need to know. Okay, so these are the trading plans that we have. Okay, so remember, trading plans is a start. So you need to keep on doing it, okay, follow through it, and then make sure you keep on fine-tune it, okay? Okay, so of course, the next thing is maintain the right psychology. So this is what I covered just now. Like you can just go ahead and have a read at the books called Trading in the Zone for those that didn't heard just now, okay? So basically on this part, they cover about one thing, okay? Trading is all about probabilities, okay? It's not guaranteed, okay? If let's say you make a trade based on your trading plans, okay, and the trade doesn't go well or the trade doesn't go profits, the trade make loss, okay. So you need to remember this is not because that you are wrong, okay. It's just because the market doesn't go all the way all the times, okay. Go all the way in your directions for all the times, okay. It's not a guarantee, okay. So basically what we are doing is we trade on probabilities, okay. So losing doesn't mean you are wrong, okay. So let your strategy to work out, sorry, to work its way out, okay. So let your strategy work itself, okay. So if the strategy doesn't work, just fine tune it, okay, until it corrects, okay. Okay, so fine tune it. Okay, this is the last part, okay. So remember, fine tune your strategy from time to time, but not changing it. Like for example, okay, for example, my case is now, okay, this is my strategy for reversal. Okay, I don't change this. Okay, I don't change this because from what I know, okay, head and shoulder pattern is a very strong reversal patterns, but it doesn't guarantee. Okay, so what I do is I will fine tune my entry on different setup. Okay, different time frames. Okay, fine tune like for example at this stage. Okay, because actually I'm also market analyst, so I analyze on the markets macro outlook. Okay, so when I know the markets uh, have a little bit change, have a change. Okay, I will adjust my entry a little bit. Okay, fine tune it. Like for example, in this case, I'll have two entry. Okay, one is on low time frames. Okay, which is immediate breakout. Okay, one is I would wait for a while to see whether price pull back or something. Okay, then I will enter again. So this is what I do. Okay, so remember, you can fine tune it but never change it. Okay, because basically what I say change is that you don't change on your C. Okay, the conditions, the criteria. Okay, you don't change it unless you are using a very bad condition, a very bad way to analyze the markets. Okay, so if you're using a chart patterns, to be honest, follow through it. Okay, because I believe what I'm doing now is I'm using chart patterns to trade the markets a lot. Okay, so basically, I'll write for most of the time, to be honest. So if you're using chart patterns, I think this is a very good method to do this, to have the C, okay, to have the C, okay, to have this C, okay, chart patterns, and the multi-time frame. Okay, the reason why I'm sharing this is because I think this is a very powerful method. Okay, so that's why for the last few webinars we are covering on multi-time frames and then how we analyze the trends. Okay, and then maybe we'll also cover on chart patterns next time. Okay, so these are very powerful ways. Okay, to help with it. Okay, so you can use that as one of the things, okay, as your market conditions. Then if let's say you are not making a consistent profit yet, so maybe you can try to fine tune a little on this part, okay, the opening of trades and then how you manage your risk. So this is what you can do, okay. All right. So basically, this is all we have for today. And so, you guys have any questions you would like to ask or would like to share about? Okay, all right. So that's all for today. Thank you, guys. See you. Oh, okay. I see. Yeah, since they ask, okay, if someone have EA set up, can I think you couldn't do that unless you have the what is it called? You can try unless you have the copy. There's a third party copy trade system that can link between MT4 and MT5. Okay, so if let's say you want to have a EA that run on MT4 but copy trades on MT5, actually I think you can, but you need to have a third party software or third party subscriptions. Even I think even what was it called the MT4. There's some MT4 EA. I'm not sure whether MT4 EA can do it, but I know there's third party software that able to do that. They can copy trades between MT4 or MT5, so you can run your EA on MT4 and then copy on MT5. That's what you can do. I think you can search online. There's quite a few. Previously, I tried one before, but it's quite expensive. It's quite expensive because it's not that's not my software. It's by my company. Okay, but there's a few which is quite affordable one. You can search online. All right, so that's it. Thank you guys. Bye bye. Okay, welcome.